So this will be our live session morning update and kind of a weekly outlook as well. But we still haven't had a complete update on a signed deal. But what we ended up getting was that over the weekend, we had this update that just came out today. But we also had Iran cutting off talks that there won't be negotiations with aggression in Lebanon. And then we're also seeing that over the weekend, I don't know if you guys follow the headline, but Trump edited the MOU over the weekend, but still unsigned. So there still appears to be no decision from President Trump as of yesterday and this morning New York session, whether he would sign off on a potential peace agreement with Iran. But he did make an announcement that even if there are clashes happening with Iran, then a deal will still work out well. So we're waiting on developments with that headline, if we're actually going to end up getting a deal or if we're not going to get a deal. But this is kind of the headline or the middle ground in between the lines that a lot of retail traders were missing out on that we were already looking into last week, right? During our live sessions. I was pointing that out, that they keep pushing this narrative on these headlines that we're moving closer to a potential deal. We have a draft done, and then we had the White House saying that actually there is no draft or that was fabricated from Iran's side. And then we had Iran's media also saying that, we have the full final draft now and we're sending it over to Iran or the US president. And then President Trump came out and he was like, I'm going to need a couple of days to look over this. All that stuff that was back and forth that was happening, and they kept pushing this narrative of there's progress that's happening. But then in the background, we were also seeing that there were still attacks going on, whether that was self-defense, whether that was, for whatever reason, there's still attacks that were going on. And so the market was reacting heavily on those headlines rather than what's happening in between the lines, which was the attacks are still continuing. You're still playing this ping pong effect of going back and forth that we have been doing for the last couple of weeks. But the market was more optimistic on, are we actually going to end up getting a deal? And we were hoping that we're going to end up getting a deal over the weekend, because that's usually what they do, where they don't give us a full update, but then they end up saying that over the weekend that there's going to be attacks, that it's not going to work out, or they're going back to doing attacks, there's going to be another deadline that's given out, or we're hoping this time around it would be different, that we would actually end up getting a deal. But still, regardless of all of this, regardless of even Iran cutting off talks and saying that, yeah, we're not going to continue on with these negotiations, we still have this narrative that's being pushed out that the talks with Iran are still proceeding nicely. But he still says, in the same exact breath, he goes that the US could resume military action if discussions were to collapse. It would only be a great deal for all or no deal at all. That's what Trump is saying. And then we also have, from just all across the board, equity side, US 30 closing at an all-time high. We have Nasdaq 100 that also closed at an all-time high as of last week. S&P 500 also pushing all-time high. Equities had a great run, but then when you come over to the commodity side, we are sitting right into those weekly support areas as even last week we rejected off of. Same thing when you come over to silver. We've had multi-week consolidation right here, and this week we're already starting to push back down. A lot of that push is also coming from the dollar's pressure, right? As we continue to have those attacks, as we continue to have this mixed sentiment in the market is trying to price in the optimism, but then you still have these attacks, and then now you're going back and you're saying, okay, there's going to be no talks happening here. So you're sitting in this bit of a higher time frame consolidation of these mixed sentiments. Even with the US oil, we had a great move back down. $90 mark is where we're expecting that oil is going to continue to drop and then ultimately take us down to $83. That's what Goldman's analyst had price targeted oil. If we see that there's optimism around this peace deal, and then this week as the market opened up, it started pricing in that the conversations are halting between US and Iran, and you start to see that push right back above that $90 mark. The $100 mark is where we're targeting as soon as there's any discussions around there's no negotiation, we're bringing military action back onto board, and you're going to see that there's going to be attacks, then we're pushing right back above 100, and we're taking it right to 110, 112. Anything below 100, anything below really between that 90 to 95 mark is just that uncertainty that the market's trying to price in. From a technical perspective, we have yet to come back and fill in that gap from a couple of weeks ago. Last week when the market opened up, gapped down and continued to push back down, we still have not filled in that gap here yet. So there's a lot that's happening from a fundamental perspective, which is also helping push a lot of these technical moves as well. Then we go back to Forex Factory. This week, already volatile because of these headlines, just open up the week. And then we have manufacturing PMI that just came out about 6 minutes ago, which is pushing above that 50 mark. But the key thing here still is that the manufacturing side is showing that expansion due to the war-driven stockpiling. Nothing has changed here from the last manufacturing PMI that we got. And the headlines that we're following there, the analyst analysis that we're following there as well from all these institutions, we're saying the same exact thing, that all of this manufacturing side that is expanding is purely because of that war-driven stockpiling. It's not because of real consumer demand or real retail demand in the economy. Then we continue down. Tomorrow, we have PMI data or CPI data coming out from the Eurozone. And then we have Bank of England Governor Bailey speaking, and he will be testifying before the House of Lords Economic Affairs Committee. So this is going to be very important if you're trading any pound pairs, GBP USD, GBP JPY, anything like that. And then around the same time, we have JOLTS job openings coming out because it is NFP week. Then continue down. On Wednesday, you have Bank of Japan's governor talking about recent economic and price conditions and monetary policy as well, which is also very important as we're trying to price in what's happening with the JPY. Very specifically, what we're looking towards as traders is that with USD JPY, we had that article that came out when the G7 meeting happened, and the Japanese finance minister said that as the yen against the dollar continues to push towards that 160 mark, she very explicitly said 160, that's when they're going to interfere again into the market to strengthen the yen, which means that they're going to try to buy up the yen to reduce the supply of the yen in the market and basic supply demand, try to drop this thing right back down like they did based off of the speculations back in 2024. And then we had it again most recently in April as price continued to drop down here. And that was a total from the top wick down to the bottom wick, about a 571 pip move. So this is going to be very important as you guys are trading any JPY pairs, USD JPY, GP JPY, Euro JPY. You need to watch out for what they end up saying there. If they actually mirror that same exact sentiment, then you will see reactions in the market. That G7 meeting, when the finance minister made that statement, it was backed by all of the other finance ministers that were present there as well. So it's not just going to be an isolated move from the finance ministry in Japan. It's backed by a global consensus. Then we also have the ADP non-farm change that's coming out from the US, so additional employment data. And then we have ISM services PMI. We're expecting that that's going to continue to remain closer to the previous, if not drop lower. That's what the services side data, the previous ones have been showing us already. And then on Thursday, we have Governor Bailey talking again. We have some unemployment claims coming out as well. Friday is going to be NFP day. Any questions on the fundamental side?
No, thank you.
All right, perfect. So then let's go ahead and move over to the technical side and start breaking down. Let's also actually take a look at some of these bond yields. We had pushed up a couple of weeks ago into those previous high levels where the markets were basically flashing a warning sign. And that a lot had to do with the inflation data points and also with the war continuation, the headlines that continued with, there's strikes going on with US and Iran and all of that. And then we started to come back into that almost 4.7 for the 10-year, and then 30-year, we had pushed up into almost 5.2. Then we came back down into a little bit of corrective, sitting around that 5%. Even right now, we're sitting at 5% for the 30-year, and then 10-year is sitting at 4.5. So we're going to continue to watch these as well. As we start to see that the concerns around inflation continue to increase, you will see that the bond market and the yields are going to continue to increase here as well. It is June 1st, so it is the first day of this new monthly candle. Last monthly candle here closed at pretty much the top of its range, again closing at its all-time high. We've already created a little bit of a top wick, so we're just going to mark that off. As the optimism continues of any potential deal, we're going to see that we're going to continue on with this bullish momentum to the upside. So the real number here is 51,365. I'm going to keep it at 51,400, just keep it at a whole number. Now come down to the weekly. This weekly candle has a little bit of a bottom wick, but I'm going to map out the previous weekly candles bottom wick just to give us a bit of a range here, which is going to be 50,400. So we have a pretty big range depending on that volatility that we're going to end up getting. On the daily time frame, this ends up being the support level right here. And then top wick, we've already created that. What I'm going to do is create a zone that if price remains below this area, I'm going to be looking for sells. If price reverses and continues in the opposite direction, then I'm going to look for buys to the upside. Drop down to the 4-hour time frame. We have a bearish candle closure here on the 4-hour. We're making a top wick, trying to push back down. Let's see if we can clear below this area and then continue pushing back down from there. Drop down to the 1-hour time frame. That is that previous support, which turned into a resistance before a massive sell-off. We came back and we rejected into this area before a nice push on Friday that happened, and then a continuation up from there. So as I drop down to lower time frames, I want to make sure that I can actually get clear candle closures below this. Previous 30-minute candle before this new hourly candle flipped and then closed bullish. So I want to make sure that this is not going to be just a bottom wick and then a flip back up and continuation back up bullish. It's actually going to be a continuation down, so I can look for those further sell opportunities. On the 15-minute, it's not like it's any clear. You had a massive bottom wick. It still closed bearish here. The next candle came back down right into the zone, made a bottom wick, flip back bullish. This new candle that just started forming, and it's about to close here actually in about a minute and a half. Created that top wick and then it flipped. So my main concern here is price consolidating and us getting stuck in a consolidation here. If I want to even tighten up my zone a bit more, what I want to see very specifically is if price is going to close below this area and if it can flip back up bullish. If it flips back up bullish, then we're looking for buys to come back into the zone for about 114 points to the upside. Nothing in this zone. And then we're going to look for sells as price continues to push back down. First, you're looking for about 55 points, take a continuation down for about 126 points to come back into this previous support. If you just follow my cursor to the left, you see how that's kind of a resistance here as well. So nothing in between here. If this candle closes above this in the next 30 seconds or so, drop to the 5. Wait for the next candle to take you right back up, and you're looking for your buys around there. So let's just create an alert for now, and then go over to, let's do NAS next before I forget. All right, with NAS, same thing, close at the top of its range. Notice the last monthly candle did not even create a bottom wick. So we did not even try to kick out the sellers or even grab any sort of liquidity. The month before that also closed at the top of its range, and the previous candle barely made a bottom wick too. So we want to be very careful here as prices start to tap into these all-time high levels, and majority of this move is driven by the AI optimism that we're getting, mainly driven by the earnings report that came out from all these tech companies that were beating earnings and showing a lot of optimism, showing a lot of growth when it comes to AI infrastructure, data centers, and all that stuff. Coming onto the weekly time frame, same exact resistance as the monthly. Drop down to the daily time frame. I'm going to map out this massive bottom wick rejection, which is also a previous resistance here. 29,700, drop down to the 4-hour time frame. And we see that there's major moves every time price rejects off of this area here on the intraday level, which means that if you're looking for day trades or scalp opportunities, great opportunities as soon as price rejected off of 29,700, respecting it as a new support level. Now, coming on to the 4-hour time frame, we also have this support that's being formed right here on the 4-hour, right? So I want to see if price is going to bounce off of this and then continue pushing. If so, we come back into 30,600. If not, drop down to the 1-hour time frame. My actual consolidation is happening right here in between this. So if price ends up rejecting off of this and then closing below this area, gets out of consolidation, I'm going to look for sells to come right back down into 29,700. Nothing in between at all. I'm not even going to narrow in the zones like I did with US 30 for a potential scalp, because this is just messy price action. But we also know that whenever price does break out of one of these levels, that there's going to be a ton of volume, and I'd rather catch that than try to narrow in my zone and do all that stuff. So even when you drop down to the 15-minute time frame, the previous 15 closed bullish. This new one made a bottom wick. As you can see, it's starting to push back up here bullish. What I want to see is clean candle closure. Make sure that we can get out of this area here and then continue pushing. All right, we got an alert hit on US 30. We got a previous 15 close right below this area, or right above this area, and then next, or the current 15 creating a top wick. But this is why we're being a little bit patient. So let's create an alert down here. I'm going to create one up there because I'm going to go do analysis on the rest of the assets. But if you see that setup where you see that this candle also closes above this area and then continues pushing, then you have your buys. If the candles close down here, do not look for an entry on a setup like this. You want an entry on a setup like this here instead. All right, so we got our NAS. We're waiting for candle closures to continue breaking past that. Then we have our buys. We're going to come over to commodities first, and then we will do currencies. Now, coming over to gold, the fundamentals that we're going to be watching here is, of course, we have the headlines from US and Iran, and then we also have PMI data that just came out today. We have services PMI that's going to be coming out later as well this week. And then we also have a lot of unemployment or employment data points that are going to be coming out. But the main thing is the fact that the deal is still unsigned, but it seems like they've made a little bit more progress, which we kind of took a step back on with US or Iran saying that they're halting any communication with the US on it. So the main thing here is we're just going to be following that headline. Excuse me. The headline is what's really going to give us the biggest moves on gold here, because if we see that we actually end up getting a deal, then that's going to drop any sort of pressure, inflation pressures, which also helps push back on those rate hike expectations that we're expecting, which is also going to help the real yields ease up, and then gold is going to recover here. But if we see that continuation of the back and forth of them saying we don't have a deal that's signed yet, but we're making progress, but then they also have a tax, that's just going to keep pushing oil back up above that $95 to $100 mark. That's going to keep pushing those inflation expectations, and that's going to keep pushing the fact that we might actually end up getting those rate hikes, and then we're going to see that gold is going to continue to drop here. So then we're going to come back up to the monthly for this one too. Last couple of monthly candles, bearish. We have our massive bottom wick rejection here from last monthly candle. If we can break below that, we're getting a massive correction on gold. So that is going to be 4372.2. And then we also have this top wick that price has already created this month. Again, it's only the first day. So these are just our small ranges to trade on intraday or scalps. And then your swing trades are going to come from price actually giving you clear candle closures, at least a first daily candle closure of this weekly candle. Now coming out to the weekly time frame, that's that previous candle open. almost the area where the previous weekly also closed. This week we made a little bit of a top wick, and then this is last week's bottom wick rejection, which is the lowest point from last month. So nothing much there. Actually, we're going to create a zone right at this daily support. As long as price is below that, we're going to continue to look for support. Weekly support, sorry. Weekly support, daily consolidation. So if price breaks below this daily support and that weekly support area that we had, where we see that consolidation here now on the daily time frame, if price continues to break below that, we look for sells. But you can see how since May 18th, we have been sitting in this multi-day consolidation. So same thing, as soon as price breaks out of these levels, there's going to be a ton of volume in either direction, and that's what we're waiting for. But we have a pretty good range, so we can look for scalps if we see candle closures below this zone, below 44, I would say 60, and then a continuation down. On the hourly candle, we had the previous hourly close below this area. We have a new hourly candle. I just want to see a top wick, flip back down, and continue back down bearish. So what I'm going to do is create another alert right down here for a continuation down into about 44.27, and then take everything down into the support as we see that pressure on the US dollar increasing, and we start to see this massive sell-off basically happening because of those headlines uncertainties. Come down to the 30-minute time frame, previous 30 again closed bearish. You have this current 30 that's still open, but if it just ends up making a fake out here and then continues back up bullish, then you look for your buys above 44.80 and you take it up into 4,500 and then 45.11, which is this previous resistance here, and if you look to the left, kind of just follow the cursor along, you see how that turns into a previous support area. So that's going to be our major next target. Now, silver, for the most part, since the beginning of the year, we have just been following whatever gold is doing, and then silver is like the more volatile side of that. But now we're also seeing that silver is starting to deviate a little bit away from that because of the new fundamental developments. Silver here, very specifically last week, started recovering from the previous lows and setting into this consolidation on the deal optimism and oil falling. We also see that there's industrial demand for silver. And then with the AI semiconductor rally, specifically with TSMC partnership and Micron production ramping up, we're seeing that this is a secondary industrial silver demand optimism that's also coming in and pushing silver and providing that floor down here that we have been seeing for the last couple of weeks. So that's the same exact thing that we're going to continue to follow from a fundamental perspective here. If we see that AI optimism continues, like right now, we know it's going to continue with NVIDIA taking on Intel and AMD with new AI chips for computers, we're going to see that silver is going to continue to push back up. But it's the ceiling that we're getting from a fundamental perspective here is the deal optimism. If we actually end up getting a deal here, then we can see that pressure relieving from the US dollar, which is going to provide that push up for silver, and combine that with whatever's happening on the AI side here too. So same thing on the monthly. We have the support, 73.80. And we have a top wick already. This is a very small range for just these short-term trades that we're looking at between today and tomorrow. And then hopefully we get enough fundamentals for that continuation for the rest of the week. So we have going into tomorrow, Governor Bailey, JOLTS job openings. We also have Bank of Japan's governor. We have ADP non-farm. We have ISM services, PMI, and then we also have non-farm coming out. So we have a ton happening from an economic data perspective, and then we also have the fundamental headlines that we're watching out for. On the daily time frame, you see that multi-week daily consolidation. Current daily candle as the market opened up, gap down. This is where the previous candle closed on Friday. This week we gapped down, and then we already filled in that gap with that top wick rejection, and we're kind of sitting at the lows at the moment. Drop down to the 4-hour time frame. You see that quite messy price action. So when I see something like this on the 4-hour, I'm not even going to drop down to lower time frames to look for a scalp here. Instead, I'm just going to set my alerts outside of these levels. I'm going to wait for that resistance or the support to be broken and then look for the trades. But note the fact that these are the same resistance and support levels from the monthly time frame shared with the weekly, daily, and now with the 4-hour, which means that whenever price does break out of it, you're not looking for an entry on the 5-minute candle. You're going to wait for your confirmations from the 1-hour time frame, get your candle closures above or below these levels, wait for your 30-minute, 15-minute for that continuation, and then check the 5-minute for that volume to see if you're going to get that continuation in your direction. So that's what we're going to be trading when it comes to silver. I would not be touching this for any sort of scalps or day trades. You have better opportunities setting up. Now let's come over to oil. Oil has already gapped up a little bit. Last month we closed at 87.75. We have gapped up to 88, so we're just gonna map out the current monthly candles open. One thing that I'm gonna map out here, just so we can watch this as we drop down to lower time frames, is those top wick rejections that we're seeing here on the monthly time frame. So that's not my resistance just yet. We're gonna confirm the resistance as we drop down to lower time frames. This is a key level because I see the volume after that. So I want to see how price is reacting here as we drop down to lower time frames. Come on to the weekly time frame. That is the last weekly candle's top wick rejection. So right now it seems like that is the potential resistance. Let's drop down to the daily. Now in the daily time frame, I see that has also served as a consolidation support before a sell-off and then a support held into 88.30. We have pushed back up above that area, came back down, and then we had a retest, another pushback down, support, support, and that's where the gap has happened. So we're going to keep this as a current resistance at the moment. It seems like it checks off as a very important level that market reacts off of heavily, even in the past. And then as price continues to break above that 94.60, then we can look for a gap fill to come up into 97.11 and take that continuation up to the $100 mark if we see that the headline developments are more towards not so optimistic, basically, for the market. Come over to the 4-hour time frame. We have a bit of a gap here that we have yet to fill in, but we had a nice rejection off of the support areas. Gold, again, gapping up because of these headlines of the talks halting between US and Iran. If we see that continuation, the easiest trade here is that gap fill and then take everything else back up. Drop down to the 1-hour. Yeah, we have massive volume. We also have massive top wicks and bottom wicks. So I would not be scalping this. If price rejects off of this and holds on to a resistance, then I would be looking for potential day trade to bring it down below this $93 mark, that previous resistance, and take it back down closer to the $90 mark or even the previous support. So I'm going to have my alert set right below 93 and right above 94.60, closer to 95. Any questions on the equities or commodities before we move to the currencies? All good?
All
Yeah.
good on my side.
We're still waiting on US 30. I just set that alert there. We got some candle closures here on NAS. So let's give it 30 more seconds. We're about to get a 30-minute candle closure. Let's see if the next one can take us back up. But here is GBP USD. All right, so right now we're seeing that GBP USD is just consolidating in this multi-week consolidation. Again, impacted primarily by the US dollar. And then we also have Governor Bailey, who will be talking later this week. So that is going to be another news that we're going to be watching out for. This multi-week consolidation that we're sitting into is also a very significant level based off the monthly time frame from that 2007, 2008. This is 2009's bottom wick. Got a massive push up. We dropped below this in 2016. Brexit was happening around that time. And then we see that we kind of stay below that area ever since then. So for almost a decade now, we have been below this area. So whenever price does break above it, we need extreme US dollar softening. We need to see more strength on the GBP side, and that's really what's going to help this pair continue to push. If not, we're going to end up consolidating. You'll see that, let's say the US dollar continues to strengthen. You see that for whatever reason, the pound is extremely weak. Then you're going to see that entire sell-off that comes back down into these key areas here. Those are some of our key fundamental drivers, which are really going to push this pair when it comes to any sort of position trading or swing trading, a longer term swing trading. But as of right now, we're going to be focused on what is the current candle doing and where is it headed next before we start to target any of these major levels. So right now, off of the current monthly candle, we have that 1.348. I'm going to map out the previous monthly's bottom wick because right now we're still bearish on this pair. Drop down to the weekly time frame. You can see that we're sitting into the consolidation resistance of this weekly time frame. We've created a top wick, and then I'm going to adjust this to sit right below the bottom wick of the previous weekly candle. So that is going to be my exact zone, which is going to be 1.337. So I've narrowed into my consolidation as I drop down to lower time frames. Just looking at the weekly time frame, knowing that this is consolidation, I know that I'm not looking for any swing trades here unless price can break below this 1.337 or above that 1.348 level. But I can look for day trades and scalps on this pair depending on the setup. Now, when I come onto the daily time frame, I see that we're sitting exactly into this daily support. If price breaks below that and continues pushing, breaking its own low, then this is about a 40 to about 46 pip range that you're looking at. If price continues to remain above this zone, hold on to a support, continues pushing back up bullish, then you're looking at about a 58 pip zone here. So you have day trades and scalp opportunities that you can take advantage of, but it's a matter of just narrowing in your zone and waiting for actual candle closures. When we come over to 1 hour time frame, we've had candle closures down here, and then the next candle takes you right back up. That's exactly what's happening here. So when I'm looking to the left, what I want to see very clearly, even for a scalp opportunity, is if price has enough momentum to clear above this area. So you're going to wait for, let's say, this hourly candle closure or a 30-minute candle closure like the current one. And if this one can break this candle's high and take you to the upside, you have about 14, 15 pips. And then this is where I would take partials. I would move to break even. I would trail my stop loss, any of that stuff if my bias is buy, and then take everything else up for about 50 pips total. For any sells, I would wait for price to come back down, close bearish. It has to close bearish. If it breaks the low right off the bat, that's not a valid trade for me. But it has to close bearish and then continuation down, and I would take that entire trade for about 40 pips to the downside. All right, we have some alert hits. I'm going to wait for a 5-minute candle closure here in about a minute, and then let's see if the next one can take us back down. But based off of these higher time frames, we have this entire sell-off. We have the hourly candle that made that top wick starting to flip. That top wick happened from the first 15 minutes of this new hourly candle and the first 15 of the previous 30 as well. We have the new 30, barely a top wick, starting to push back down. 15. I want to see candle closures here and then a continuation. So we have about 30 seconds left here. Let's see if we can get a bearish candle closure here on the 5-minute, and then the next candle takes us back down. So I'm going to create an alert right down here. Now it's rejected right into those wick rejections. So same thing here, wait for the 5-minute candle closure. We have the first 5-minute candle closure, break and retest that setting up. The next candle needs to give you a bottom wick and then flip, and that is going to be your buys. All right, let's come over to Euro USD then. Now Euro USD, pretty much from a technical perspective, same exact setup as you can see as GBP USD. Now we're gonna map out the previous weekly candles bottom wick, shared by the week before that as well. And resistance up top here. So we've been sitting in this consolidation for the almost last 3 weeks, drop down to the daily, and that consolidation becomes more clear. So same thing here. I would not be looking for any sort of trades unless price can break above 1.166 or below 1.159. And for this one, unlike GBP USD, which was sitting closer to a resistance area up top there and left a much bigger range for us to come back and fill, Euro USD doesn't have that. So I wouldn't touch this pair for any scalping or day trades. Euro USD would not be on my list for any of that this week. Let's just go back and check up on these pairs here real quick. This is your new 5-minute candle. The previous one closed bearish. Let's see if we can continue breaking our own lows here. And then for this one, continue breaking our own highs to the upside. All right, GBP, JPY. So for this one, we have Bank of Japan governor who will be talking. We also have Bank of England's governor who will be talking. And we still have these headlines that are developing and we're watching. So here we have last monthly candle that didn't really break the previous highs here. We're just holding onto a resistance. This monthly candle just made a bit of a top wick into, I'm just going to call it 215. Let's drop down to the weekly and map out the bottom wick of the previous weekly candle, because that's going to be our first range that price has to break below before it can continue back down into these previous support areas here. Onto the daily time frame, you see that we're starting to get some weak volume here. And very specifically, I want to see if price can continue closing below this area. If it does, which is that previous resistance to the left, as you can see here, continues to break its own low. So I need a candle closure down here first, break its own low, and then continue pushing down. You have about 60 pips turned into about 82 pips to the downside. If price closes at the zone or above, I'm not looking for buys unless price clears above 215 and then takes us up for about 117 pips to the upside here. 4-hour time frame, that's where we're seeing those higher high formations. So that's why I'm being a little bit extra careful. My exact no trade range is going to be everything in between here. So only look for sells down here or look for buys above 215. Any questions on any of the assets that we have just covered? Everything makes